Have you ever wondered why the markets sometimes feel like they're stuck in first gear, yet somehow still speeding towards a wall? Well, global sentiment right now feels exactly like that, a blend of confidence and caution, where central banks talk tough, traders hedge harder, and everyone's waiting for someone else to blink first. But in this special edition of the market brief, we are zooming out, taking a swing trader's perspective on the markets that matter most: gold, oil, and the Euro USD currency pair. So grab your notepad, cup of coffee, and well, this one is about positioning for the next big move, not just the next 5-minute candle. So before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Hi everyone, I'm Francois, your market analyst here at ATFX Africa, and welcome to the special edition of the Market Brief. Now, in this swing trade edition, we step back from the daily noise and focus on where momentum could build over the next few weeks to 3 months. We'll look at fundamentals driving sentiment, technical zones, and where structure might be setting up for medium-term opportunities. Today, as I stated, we are going to cover gold, and we are going to have a look at this unstoppable safe haven with maybe a hint of exhaustion. WTI crude, which is fighting gravity as oversupply fears mount, and Euro USD, which, well, where indecision reigns supreme in a battle between two central banks. Let's start with gold, the market's emotional barometer. Every time global uncertainty flares up, gold shines, and this quarter is particularly glowing. Gold recently hit 4,380, a fresh all-time high, before a sharp $195 pullback shook out some of the weaker hands. But make no mistake, this rally isn't built on hype alone. Central banks buying remains strong. Geopolitical tensions are simmering, and with the Fed expected to cut rates next week, real yields are still under pressure. The combination of a softer dollar, rate cut expectations, and renewed safe haven demand keeps this metal well supported. That being said, even a bull needs a rest. And Friday's price action looked like a brief cool down rather than a trend reversal. The question here is, will this be a healthy dip that we are seeing on gold that refuels momentum, or the first crack in the armor? Having a look at the charts, technically gold remains in a strong uptrend. There is no debate on this, traders. But the RSI on a daily time frame is flashing extreme overbought, suggesting we could see some sideways consolidation or a pullback towards that $4,000 zone before the next leg higher. Key support currently sits at 4,100, then 3,800, and then 3,650. While resistance is at 4,380 and then 4,400. Now, a break above 4,400 could open the door towards that 4,500 level and beyond. However, a close below 4,200 may invite deeper corrections on this precious metal. Traders will definitely be watching whether the upcoming Fed rate cut reignites bullish momentum or whether a stronger dollar caps further upside. Either way, gold remains the market's emotional anchor. Calm on the surface, but full of tension underneath. Moving to oil, where the narrative is shifting from shortage to surplus faster than a barrel can roll downhill. Crude has fallen for 3 consecutive weeks, trading near $57 a barrel as the market grapples with rising global production and a slowdown in economic growth. Baker Hughes data shows US rig counts stabilizing at 418, but production efficiency is climbing, meaning more oil with fewer rigs. The OPEC Plus output has increased, coupled with rising inventories and nearly 1.2 billion barrels now at sea, which is painting a clear picture. Supply is abundant. Add to that the lingering US-China trade friction and global demand concerns, and pressure builds on crude. However, expectations of 2 more Fed rate cuts this year could soften the dollar and offer temporary support to oil prices. WTI remains trapped within a 3-year downward channel. And the latest breakdown from the 50-week moving average signals that the path of least resistance is still lower. Key resistance lies around $59, while support levels stretch down towards $56, with a medium-term target near $50 a barrel by year-end if momentum persists. From a swing perspective, oil might be setting up for a potential mean reversion bounce, but only, in my opinion, once sellers exhaust themselves near that $50 zone. Traders will be watching if inventory rebuilds or potential geopolitical fears flare up, which can trigger a short-term rebound. Otherwise, WTI looks poised to remain under pressure as supply outweighs sentiment. And then finally, the world's most traded pair, Euro USD, which lately feels like watching paint dry in slow motion. The pair slid to 1.163, weighed down by a stronger dollar and renewed optimism that the US government shutdown may end soon. Expectations from the Fed's upcoming rate cut decisions are also well priced in, while ECB maintains a steady hand approach, keeping rates unchanged as inflation trends near target. Trade tensions between US and China add another layer of uncertainty, but for now, both sides appear to be trading carefully. Still, euro sentiment remains subdued, with traders cautious until they see a catalyst big enough to shift momentum. Technically, the pair trades in a broad consolidation zone, oscillating between 1.154, which is the support, and 1.1740, which is the resistance. Below that, 1.14 and 1.128 mark deeper supports tied to that 200-day moving average. Momentum indicators are neutral. The RSI on the daily is sitting around 47, the ATFX at around 16, which suggests indecision and a lack of trend conviction. In short, Euro USD is stuck between fundamental contrast and technical hesitation. As traders, we need to be watching for clues from ECB President Lagarde, which is speaking during this week, and the US PPI release later this week. A dovish Fed tone could finally give the euro some breathing room, but until then, the pair may continue its slow dance in, well, that mid 1.16 range. So here's the big question. Will gold's momentum stretch into 2026? Will oil finally find its floor? And will the euro wake up from its autumn slumber? One thing's for sure, the next quarter will test every trader's patience and conviction. So keep your eyes on the charts and your emotions off of the charts. And with that, we wrap up your daily market brief or swing trade market brief. Brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to ATFX Africa by clicking the link in the description and go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.